Hey guys, welcome back to the channel. Today we're talking about the Sofi stock split and why I plan to keep buying more shares before and after this stock split takes place. If that sounds like something you're interested in today, guys, do please smash that like button, consider subscribing to the channel, and let's get in there and let's take a look at why the stock split does not bother me one bit whatsoever. Hey guys, welcome into the video. So here we are on the Sofi Technologies landing page on Seeking Alpha. So as you can see, the stock performance over the last year has been absolutely terrible, minus 66% to date. However, the reason I'm not fussed about this and I'm not fussed about reverse stock split is because this is approaching at $7 a share. It is approaching the penny stock status. Institutional buyers do not buy penny stocks. It's as simple as that. So a reverse stock split, basically one share back for every 10 that you own, would boost this up to $70 a share, and then we're in business again. Although the fundamental value of the company hasn't changed, it is a much better and rock solid share price. And some people will argue that then the share price has chance to fall even further, but that's not the case. The market cap for this company is currently at $7.60 a share, is $6 billion and 910 million. So it has already came down pretty much as far as it is going to go, especially when you look back over the recent history. It has gone down to $5.49, but it has lost a lot of its value from its all-time high because of headwinds that have come from fintechs getting absolutely hammered, the issues with the ongoing situation in Ukraine and Russia, and then you've got the ongoing market conditions and the student loans issue as well that have properly hammered the stock. But this isn't going to draw down from $70 all the way to $7 again, and a lot of people are thinking that way, and that is because obviously if that was to happen, then another 80% of the company's value would just be wiped off, and that's not the case for a company that's got as much potential as it has, as much cash in the bank, the revenue streams that it's got online, and the ratings that it has. As you can see from Seeking Alpha Authors, it has a buy rating from them and from Wall Street, but the computerized version, Quant, does have it at a sell. Now, the reasons I'm so interested in this company, I am a shareholder as it is, but I'm not fussed about the share price being split back down and only having the 10 shares, but yet them being worth approximately $70. And the reason for this is that there is a lot of public ownership in the company. So as we can see here, these are the individual ratings from Seeking Alpha versus Wall Street, and they come out not too dissimilar, to be fair. So revenue is obviously on the upkeep, and we've seen that through and through. I'm not going to go too overboard with that, but what I'm trying to get down to here is the ownership. So institutions only own 35% of this company going forward, and that is extremely low for a financial institution and a bank. When you add the corporations, public and private, into it, it gets a little bit better, but public and other still own 44% of this company. And what the CEO, by announcing this potential reverse stock split, is trying to shake some people out of owning them, especially retail investors, because they want to be owned by institutions and corporations. They're not really that fussed about public ownership, despite what they probably say, because there's a lot of people out there. Institutions hold for the long term. They play the game. Sometimes they release hit jobs to try and get in at a lower price and then get out much later on and make an absolute fortune. But there's a lot of public investors out there that as soon as the stock dips 10%, they just chuck the shares right out the window and forget about all the fundamentals, the good fundamentals that this company has. So the company will not be bothered if by doing a reverse stock split, this sort of percentage here, 44%, actually changes more over to being 44% in institutions or 50% or better, because that makes the share price a lot more steady and a lot less volatile. And I think that is what Sofi would like longer term, because that's where this company plays. It plans on being a Goliath fintech financial institution, as you say, the AWS of banking in the sector, and it's working very hard to own all the infrastructure in that. As we can see, there's still 20% short interest in the company, and again, that is because there is so much public ownership that it is very easy to short a position, especially with it falling as far as it has. I mean, it's not ranked very highly by Quant at all at the moment due to stalling momentum, student loan forgiveness, etc., etc. However, when you look deeper into the picture, I'm going to go on this to the Seeking Alpha article here, written by the Asian investor. They highlight the fact that the CEO has purchased an absolute bunch of shares between $6.50 and $9.96, which gives me confidence in the company going forward. Insiders don't buy back tons of stock if they're not confident in the performance of the company. So yes, they have some short-term problems, especially because of the fintech sector at the moment getting absolutely hammered and the student loans issue. However, Sofi is not just a student loans company anymore. This is the sector that it's concentrating on here, but there are so much more available that Sofi does. Isn't just student loans. Yes, it made its name in student loans. Absolutely 100% agree with that, and glad that it did, because that's the origins of the company. But companies don't just start out dominating the market. They have to start somewhere. Sofi started in student loans, but it is transitioning away, and student loans will make up the revenue might not shrink, but they will make up less and less of the revenue as all the other revenue sectors grow. And that is absolutely great news. Here you can see the CEO buying up all the shares. There are some risks associated as highlighted here. Also, guys, if you're thinking about getting a stock analyzer, Seeking Alpha is absolutely great. If you use my link in the description below, there is a $40 discount against an annual membership, which is obviously going to be really good. This is in association with Seeking Alpha, and it will provide you with the premium account, and it gives you access to the quant computer analyzer, the AI analyzer that screens stocks for you and takes all the hard work out of investing, basically, if you just follow that. So moving on to talking about the student loans, as you can see here, President Biden is potentially going to cancel $10,000 in student debt per borrower. This is effectively going to apply to people earning less than $150,000 a year, which is 97% of graduates, and it's going to cost an absolute arm and a leg and a fortune. Obviously, Sofi would be negatively affected by this. This is, again, why the share price has gone as low as it has. But I'm a big believer that all the other revenue streams are growing, so it'll be less and less relevant over the coming years. And I think that the market is underestimating the absolute massive potential that Sofi has going forward. And if we just get involved in another article on Seeking Alpha, absolutely fantastic reads by Stephen Farello. As you say, it is showing that it's declined 71% over the last year, and the student loans operating sector is taking 50% less revenue. And that just shows you how strong Sofi is it's not actually affecting the company that much, only by a few percentage points versus the revenue. But this is the thing: did Apple, did Amazon, did Google, did Coke dominate their sectors immediately? No, they had to build their way into it. And as we said, student financing was where this company started, but it does a whole lot more than that now. As highlighted, it wants to be the AWS of the fintech sector, and this is where you have to understand the Traffica, Galileo and Technisys side of things, where it's going to add a lot more revenue, a lot more coverage, and a lot more assets and infrastructure to the company. And if you just look at the revenue, the membership growth, the financial services that it's providing, they just keep leaping up. And the longer Sofi can keep customers in their ecosystem, the more Sofi products they use, and therefore the more revenue goes on, gets made essentially, and it just keeps going and going and going. And as you can see here, there's some information from the investing presentation right here. Sofi is the AWS of fintech, but the market just doesn't understand it yet, and I wholeheartedly agree with this. Once this Technisys Cyberbank and all the other assets that Sofi now owns start to take root, give it a couple of quarters to do so, the market will realise this. I'm absolutely confident of that. Moving into the investing presentation, just a little bit more detail on the membership growth. It is really starting to tick up now, with huge numbers joining the company, especially the same in products. And then you've got Galileo accounts increasing all the way as well. And then lending products as a whole and financial services products as a whole all increasing quite steeply going forward. And this all adds to this revenue, absolutely massive revenue sectors all coming together and streamlining this pipeline to make the company a hell of a lot of money and become profitable in the near future as well. So if we just slide on to the bottom here, there's a lot of revenue to look at there. Of course, if you want to get into the investing presentation, please do. I'm just flicking down to the financial sectors because I want to cover the loan origins. So having a look at where the student loans was versus what's happening now. So back in 2020, just look at the difference between student loans, personal loans and home loans. Then in 2021, it shrinks a little bit, of course it does, but look at the growth in these sectors here. And you come through to 2022, this has shrunk still further, but this has grown up massively. And this is what is happening so far. It is the student loan side of things is shrinking, and this is why the stock split going the way that it is. I'm really not that fussed going forward because I know that the student loans issue will go away over the longer term as the rest of the company grows, and I know that there's value locked into the new share price. If it becomes $70, would be very, very surprised if it shrunk by 50% in value again, and that is what a lot of people are scared about, but I do not think that will happen. I don't know about you, but I was really happy scooping Sofi shares at the $5 to $6 mark. Unfortunately, it's now ticked back up to $7, $8 a share, but that is still a pretty decent price based on the future potential of this company, all its revenue growth. There are some significant headwinds for this company, but there's also big tailwinds further down the line. Once the situation in Ukraine has cooled off a little bit, once the student loans issue has cooled off as well, and we just simply know an answer from President Biden what's actually going to happen, that will allow the company to focus properly. And then that sector itself is shrinking within the company as the rest of it generates revenue. I'm not fussed about that. I think the reverse stock split will do the company good. It might drive out some of the paper hands people, so to speak, that aren't going to hold the stock for very long, and then it will allow the institutions and the share price to stabilise a lot more because people aren't just going to be selling out the stock left, right and centre, and then that will allow the share price to tick up over time as the company's financial reports come in and it improves over coming quarters. I can't wait to see that happen. I'm happy to sit on my position. I'm happy to lose my 110 shares basically and only get 11 shares back at the higher price because I know that the value in the company is still there. If you agree with me, do please smash that like button, consider subscribing to the channel, and hopefully I'll see you in the next investing episode. Catch you later.